Folks, it's midweek update time. It's the 13th of July, if you can believe it already. And let's just jump right into it because we got ourselves an interesting little number in the CPI. It came in a little hotter than expected. Okay, guys, I'm going to give you my 2 cents on what I see in the markets. We're going to share some trades. You guys know the drill. Take responsibility for the outcome. What am I talking about? Well, resistance held as the markets were moving lower this week. And I did love it. I talked about this, I believe, Monday. I liked it going into the weekend, thinking that, hey, we're going to test. We're definitely going to respect this resistance level, and we sure have. Monday, Tuesday, and into today. We got a little bit of a push to the downside this morning. Futures dropped pretty aggressive, although the markets are correcting with that. Our CPI number came in at 9.1%. Now, folks, we're going to get to the economic data. It was expected to be higher than last. 8.5 is what it was last. Expectations were 8.8. It came in a little hotter. So we'll discuss if that's going to have a negative reaction and we're going to get some selling follow through, or if the markets can just absorb it. It's not that big of a deal. Energy and materials continue to fall. I do believe these markets are pricing in recessionary levels or recession or some sort of a slowdown in the economy. We're also seeing gold and oil drop, although all of that is flip-flopped a little bit today, I just think, in light of the CPI. The dollar did move extremely higher. It's been careening higher for a while. It's pulling back a little bit today as I speak. So sentiment out there is completely bearish. What I'm seeing the markets do is price in a slowdown in the economy. We're actually seeing signs of that. We've seen oil come down substantially. And I do believe there's just thought of less demand moving forward. We did have a pretty good build in gas reserves, so you might have noticed a little bit of a slip from the pump. I made a comment to a couple of traders that I've been working with about, hey, oil and gas do not really correlate. However, we are seeing easing at the pump because of build in gas reserves. Now, that directly relates to supply and demand, meaning that there is less demand for it. That could create its own slowdown. Darren makes mention of this really good all the time. He did on Sunday's trading class saying we're in this weird situation where inflation's out of control, supply is a little bit hard to do. We have a consumer that's active but just now starting to slow down, so signs of slowing there. And it's just going to be this, what's going to give first? I've said it a lot. So that's kind of where we're sitting right now when it comes to the overall markets. Now, there are good trades out there. That's one thing that I do like is some of these trades that are inflationary resistant, if you will call that, or not inflationary resistant, but resistant to a slowdown in the economy is going to be flight to safety, defensive stuff, and or things that we like, leisure, cosmetics. Chewy's one of them, pet food, pet care stuff. That stuff seems to do good. Now, I was digging through some bear lists, and I found a couple of neutral trades that I thought was really cool. And take a look at them. These are things that have been beaten down quite a bit. They're very specific to the stay-at-home stuff and then an energy company out there. But I'm not saying that they're going to fall apart anymore or even run back up to previous highs. What I do believe is they might have been beaten down enough to where if these markets do stabilize, this could follow suit. So we'll talk about those. And on the bear side, Disney continues to go down. We had Match and JP Morgan. These are good descending triangle patterns, all of them from class last week. So let's just jump into Chewy here. Now, I like Chewy because it was showing a lot of strength over the last week or so. Now, we have been down Monday, Tuesday, and today. You can see that Chewy just kind of hung out there and just kind of stuck to its kind of its sideways attitude. I love this. So instead of pulling back, it just stayed within this range. And this does create a very aggressive ascending triangle pattern above, or I should say hitting resistance at $45. You could see that we had kind of a symmetrical triangle pattern here in the past, and that 45 could be a pretty good level to where this can consolidate or even push higher if you guys truly believe that the markets are going to continue going stronger. I do like it. It's kind of an outperformer. So moving on to, and that's all I had for the bull side. Kind of interesting, right? Moving on to the sideways stuff. This is Southern Company. It's utilities. Been getting kind of beaten down. You could see the move that it had to the downside there beginning of June, but it's been pretty tight ever since. Now this you could play it a couple different ways. We could play this tight symmetrical triangle pattern with the an anticipation that it's going to get above maybe some of these levels that we saw back early May, through May, I should say, and we'll get that nice breakout that we've seen with these high and tight or symmetrical triangle pattern breakouts. Or if you truly believe that demand is going to stay light and slow and this is going to kind of chomp along, well, then what we could do is go a little bit further back here in March and see if we can find a range that this could play in between then and whenever you guys decide it's not going to go sideways anymore. So there are trades out there, and there's some decent ones in up, down, and sideways. But sideways I thought was pretty interesting. Usually I don't have this many. Here's Roku. This was on my bear watch for a while. What really changed my mind about this is you guys can take a look at this little pivot point here that it set end of June and July. So this was a higher low, and we do have, what's this, folks? That's right, descending highs. So we've got this nice little situation to where you have this symmetrical triangle pattern. Now, it could break to the downside if you think the market's going to roll over. It's in the worst sector you can think of, the communication services that has just been beaten down. Quick spoiler alert, folks. Yes, it is the weakest sector so far this week. So you could play this as, hey, I think it's going to consolidate and roll over and maybe break some of these support levels, and I can get into it the bear side. Or, like I say, let's move back out and let's take a look at an area where it could range between, let's say, 80 and let's go 100, because I like some of these things that I'm seeing here. Its last couple of highs. So we could play this range bound. I'm sure it's going to have its earnings if it hasn't already, right? We're getting into earnings season, so keep that in mind. But a pretty good example of a sideways stock. And then the last one that I have on the sideways range is ARK. That's right, good old Kathy Woods. And I'll admit it, I've been beating on her for a while, over the last year or so. And take a look at what's been going on with this stock. First off, I do like that it has a range. It's kind of trying to establish a little bit of a range here in between 36 and 45. It's got a pretty good pivot point that it's set back in the end of June, early July here at 45. And yes, folks, once again, we do have this ascending pattern going on. So truly, I don't think that this is going to revisit the heyday that we've seen in the past, back up to the 70 mark, so on and so forth. But I do believe that it could probably stay above that 40 level, or at least at 36. So something sideways to up if you guys don't want to get too aggressive in direction anytime soon. A little bit worried about how inflation is going to play itself out and how these markets digest that CPI number. So if you think that we're going to kind of meander around, this is another trade that we could possibly play to the sideways. Maybe people are done beating up Kathy. Moving to the bearish side, I just love the descending triangle patterns. All the stuff that's been bearish, doing really weak, not doing so well, continues to do so. I'm going to say it again, folks. All of these probably have some sort of earnings, but you can see we have a descending triangle pattern here at Disney. A nice breakdown almost confirmed today, or confirming today if you guys want to play something further down. Now, I've zoomed in a little bit here, so if you guys want to zoom a little bit out or snap a Fibbo, see how far this can go. If it does break that descending triangle pattern, it looks like another $10. I'm just taking into consideration maybe a range back in here and the range that it had here before it broke. So about $10. So if it breaks 90, maybe you could shoot for 80, something like that. It might be a nice little breakdown. Timing is going to be huge with this, also going into earnings, so keep that in mind. All right, let's move on to our next stock. This is Match. By the way, these all came from class last week, so great work, folks. Confirming today, gaps down. Gaps suck because what sucks about a gap is a gap's down and it takes away this beautiful, let's say you've got a bear call or bear call spread or bear put spread or some sort of diagonal all set up and ready to go, and the thing gaps down 2.5%, right? Crap. You don't want to pay as much to get into that same position as you were planning on if it was just to roll through the lower levels, but that's fine. I still like these credit side because the credit might not be as big, but your probabilities just increased. So what we could do with this trade is just focus a little bit more on this level, more so than the continuation of a move to the downside. Just say, hey, I think we'll call it, let me draw it a little fatter here for us, folks, about 70, 68, 69 level. Hey, if it can stay below that, sideways to down is completely fine. But give yourself an opportunity to gain more if it does want to roll over and test that 65, 64, so on and so forth. You guys could go ahead and snap the Fibos on that. It does seem to have a little bit of a range to where you could calculate sideways to down. But as it is now being below that level, I'd play it a little bit more bearish. And finally, we have JP Morgan. Same idea, same descending triangle pattern. Just take a look at support and resistance levels. It looks like it was consolidated. This is tough because if we want to go back to mid-May, it did bounce a little bit. It seems like it's been consolidating through this area for a little while. I could almost draw another support line at about 112. However, it's just not looking very good. It's in the financial sector. Increased interest rates are going to cause some of its investments or slow down in people using them, so on and so forth. These companies don't do very well when it comes to inflation. So it might continue. Let's see if it could break the 110. If you guys want to play this directional or sideways it down a little bit, more of a 115, 110 sideways diagonal spread might be something a little bit more reserved. Costs a little bit more, but it's got a higher probability. Okay, so that's what we've got so far with some of the trades that we talked about over the last week or so. Some of the things that are on my watch list. The CPI number has been fun for me, actually, just to kind of watch the reactions. When I saw the number come out, the initial reaction, those futures just dropped off a cliff. They just went straight down. I was thinking to myself, well, let's see what happens when the market opens, because it wasn't too far off of what was expected. Sure, it's bad, but it wasn't anything unexpected. We also have a Fed they are determined to stay ahead of it and do the best they can. So what do we got? Dow, the S&P, the Qs, everything's down. Russell's down. Oil, gold. Gold actually is hanging in there. Now, folks, this is Monday, Tuesday, and so far today, about as of 20 minutes ago. So it was a down week anyways. We were already pulling back from resistance level set on Friday. So Monday down, Tuesday down. Good confirmation of a bear rally. Well, I don't even know if we can call it a bear rally because it did come from a higher pivot low. So overall, let's just zoom into the chart because I'm seeing green, even though this is a bearish move. What do we know? Well, we've got this nice descending slope going on. I think Corey drew this yesterday. He drew it a lot better than I just did. But what is giving me a little bit of a hiccup is this. This is a higher low. I expected this. We all expected this. We talked about this. It's definitely going to respect or retest that 390 level, and it did. And it looked like it was about to roll over. Well, it was rolling over Monday into Tuesday. The gap down today, today's candle's green. Now, folks, that can completely change as I go to the live markets here in the next 10 minutes, 15 minutes, to see if that's red or falling apart. But I do think this pivot point, if this pivot point holds, we're going to have something a little bit more bullish than I think a lot of people expect. And we could get back into that said range that we've discussed over the last couple of weeks. This could be at least putting it into sideways. Now, if the markets have priced everything in and the sell-off that we saw early on in the spring is enough, meaning the traders are fine with it, let's just start putting money back to work. Once it starts to get into the recessionary area, we are starting to see a slowdown unless jobs are lost and expansion slows aggressively. I imagine these markets meander sideways or even, that's right, folks, you've heard it from me, even move a little higher. It just depends on how much garbage is already priced in when it comes to fear. All right, there's my 2 cents. So let's take a look at the diamonds. Pretty much the exact same pattern. These could go substantially lower if we don't get the Fed ahead of this. If we get another number, another inflationary number at 9 again, or 9.2 or 9.3 or something more where it's not working, then these markets will panic for sure. But we are seeing easing at the pump. We are seeing a consumer that is slowing. We're seeing contraction on our end, and that's actually going to help. I'd like to see groceries come down. The first thing to react, the quickest thing to react, is your commodity stuff, is your energy. Energy materials is the first to go down. food usually comes later because demand never really drops off for that. All right, so diamonds, I don't want to get too far into it. It's pretty much the exact same pattern. You've got that descending kind of the descending highs. You've got a symmetrical triangle there right around the 310 mark, and it also respected its resistance. Qs, still the weakest, still the most volatile. You could see when we saw it was down the most so far, but a pretty good bounce off of the today's low. That 280 mark is pretty substantial for it. Actually, all of that support for all three of these markets is pretty important when it comes to just the tone it sets technically moving forward. Right now, it's hanging in there, guys. It's hanging in there. So let's jump on to our economic calendars and take a look at some of this stuff, folks. Yes, this is cleaner than what I did before, so I like this. But the big one is right here. It is that July 13th. Today we had a 9.1%, expected at 8.8%. You guys can see that down here. Now take a look at this. Previously it was 8.6. The expectations were for 8.8. So yes, inflation in the analyst mind or the economist was not peaked yet. So 9.1, it's up a little hotter than they expected, but they knew it was going to go north before it plateaued and came back down. So we'll see if these markets digest this and we actually finish positive for the day. Or they just say, hey, you know what, I'm not going to worry about it. I don't want to guess if the Fed's going to do a half point, three-quarter point, or full point, and I'm going to bail out. We'll see. But these support levels we looked at previously need to hold. So that's going to be the one on everybody's mind. Past that, we've got some other stuff to look at. The PPI follows right after the CPI. I imagine that's going to be hot as well. Jobless claims, continuing claims. They did tick up a little bit last time. Or actually, I shouldn't say that. New jobs created actually increased. Jobless claims and continuous claims have been pretty much in line with expectations, so there's not much going on there. If that starts to hike, I really think if people start losing their jobs, we're going to have another problem in these markets. So now that we're here, let's go ahead and do our poll. I'm going to launch this bad boy for you. Here it is. And this should change. It was moving. You can see as people take the poll. Yeah, that's for you people who are watching this recording. For you guys taking it, you just got this little blue screen that says click a button. So you can see very quickly we had about 93% voted in the first 30-something seconds. And you can see that's kind of where we're going. So since it stalled out very quickly, I'm not going to waste any more time. I'm going to go ahead and close this bad boy, and I'm going to share it. There. Now you can see that we are basically at a -1 to a 0. 31% plus 1, 69% negative 1, 54% 0. So the expectations are, hey, we did gap down. We are moving higher, and I have to agree, folks, we are still in that bull pullback. Monday down, Tuesday down, Wednesday's a gap down, but we've retraced the majority of it. But the candlesticks are 1, 2, 3, down, down, down. So yeah, that -1 seems to be dead on. Well, overall, I'm moving to a -2, and the reason being is because actually I thought I had to change that to below the 20-day moving average. It is right at the 20-day moving average, so technically that could be more of a yellow than a red, but it is below the 50. The slope is bearish. Everything's looking bad, so I'm still a -2. Now, for fun, I just said a +1. Why is that? If these markets can absorb that quote-unquote unexpected CPI number, which really isn't too bad, and we retest the support level, right, that we saw. Let me zoom in on it. Whoop, that's the wrong button there. I should be able to zoom in on it. There. This level right here, 375, we could have a confirmation of that support. It really just depends. I love the fact that you guys are -1. I should be -1. I just went ahead and said +1 just for the fact that I saw these markets come off the bottom very aggressively, thinking that, it's not that big of a deal. It could go either way. The big deal is if that 375 doesn't hold, then we have to look all the way back down to the 365 to make sure that this doesn't break apart and now we're setting lower lows. If it does, well, then we've got some problems. If it doesn't, then guess what, folks? Yes, that's right. We created a range between the 365 and 390 that we could probably finish the summer out. Well, however, if these markets really want to hold on, they're not worried about it, people are sick of inflation, I see a retest of 390, maybe even a break up to the 410. However, that's just a wider range, isn't it? Instead of being between 365 and 390, I think we're going to be between 390 and 420. That's all. That can change. Doesn't really help us one way or the other in the long run, does it? But it's something to think about for now. All right, guys, cool. So, I don't know which button to hit to get back. There it is. So that's kind of my outlook. So let's get into our sector analysis. And the reason why this is kind of easy is everything that's been super weak is staying weak. Everything that's been strong is not really holding in too well. So the biggest bounce we saw is in energy. It's been the one that's the weakest. And yes, folks, energy materials are still leading the way with the weakness. But they have been taking a break when as the markets have been correcting so far this week. So strongest, energy. You can see that's all this is. It just hasn't fallen as much, and it had a pretty substantial move so far today. It looks like it's given most of that up. Take a look at the, what is that? Do you want to call that a shooting star doji already? Jeez Louise. But it came off of 70 pretty aggressive. So not looking very good. It has revisited some support that it found end of February. Let's move to communication services, the thing that's been beaten down the worst and always has been. I think it will continue to be beaten down as there is still money in these. We'll see. We'll see what earnings does. We'll see. It's going to be interesting to see if these numbers can report enough to where that carrot is worth trying to chase. That's all this is. They'll talk about, well, this used to be $100 stock and now it's 50 and you could buy it so cheap. So we'll see how good of the sales people are when it comes to the how they spin the earnings report. So that's pretty much it for sectors. Not much change, just a little bit of a reversal that we've seen over the last few days. So moving lower from resistance levels, absolutely confirmed Monday. I talked about it as well. I did love it. I said it's beautiful to have that touch. It's going to roll over. For how long? I thought it was going to continue. It could still continue. We'll see how that CPI number is digested through the rest of the week. Gas prices moving lower because of a build in supply. Interesting. That means that at the pump, the consumer has either cognitively seen it or is actively buying less gas. I don't know how long that lasts. We'll see. Will new support hold or break? That's kind of where we're at. I love the fact this class is a -1. I'm a +1, and we're both talking about the same thing. Is it going to roll over and bust that newly set support last week, or is it going to revisit it and respect it and see if it can't move higher? See if we can just get rid of this number and forget about it. Inflation's old news. Let's move higher. I don't know. Sentiment definitely bearish. Overall, -2 on the long term. CPI showed higher levels of inflation. That'll be in our face over the next week. I'll probably bring it up again tomorrow. That's how it works. What is the Fed's next move? 75 basis points, 100 basis points, 50 basis points. I don't think it's going to make a difference. The more aggressive they'll be, I don't think that the market's going to react too much. I truly think that the reaction that we had last time when the markets fell apart after that CPI number came in way off, I think they're pretty much, it's one of those things, once you're spooked once, you go around that corner and you're yelled at again, you don't jump as much. So I think we're in that situation. So I don't think we get the reaction on the Fed meeting that we did before the previous Fed meeting when that CPI was so hot. So we are moving into earnings. So double check everything. I've got some. We're going to look at some trades here in a second. Just make sure that you guys double, triple check the earnings, unless you're trying to pay or play them. All right. So let's go out and look for some trades. So since we've been babbling. And this was interesting. I saw these markets gap all the way down here, folks. Right as soon as that number came out saying, oh, geez, that's bad. And look what they've been doing ever since. So, we'll see. We'll see how they digest it. Maybe we roll over and fall apart, and then we're jumping on all those bears, and we're super happy. All right, so not a lot to look at today, which is fine. I'm glad that we talk about trades that looked great last week. By the way, there was another one. If you guys want to take a, well, let's do it right here. AMGN was also on our sideways watch list for a couple of weeks. Look at that. Love it. You guys playing the 245, 250 are just killing it. 240, 250. I talked about 230, 260, I think. So it has been doing really well. Just a little side note. That's right. Puffing up my chest because you guys are awesome. So let's take a look at EPD. Brian's got a couple for us to look at. Thanks, man. Here's EPD, July 22, 25, 23, bear put spread. All right, let me jump on in. And we'll take a look at this. 25, 23. Here's our 25 level. Looks nice. And our 23 down here. Love it. Excellent. Look at the range it's had. Really great. Super cool trade, man. EPD. Write it down. Can I put a sideways on there too? No, I'm going to put a bear because you're playing the upper Bollinger Band or upper resistance down to support. Excellent. Yeah, I'll leave that as a bear. I like it. You could play a little sideways in that if you wanted to as well. Very nice. Thank you. We also have, is this waste management? This has been back and forth on a bunch of watch lists, especially working with some of you guys. It's been a pretty good trade. This nice breakdown that it had when the markets rolled over the first time. Beautiful. And then it absolutely hit support back in February. Oh, I like it when they do that. It looks like it's on its way back down. You're looking at 152.5, 145 bear put. 152.5. I'll split the difference there. Did you say 145? That's what hopefully I said that. Yeah, not looking for all the way down to 140. That's completely fine with me. Just taking a little bit, some of the skin out of there, right? Or I should say the majority of the meat off the bone, not all of it. But look at today's candle. It's a little bit disturbing because it gapped down. It's almost showing it's going to find support there at 150. But the last 3 days, just like the markets, there's down, down, down. We'll see how today ends. Cool, though. I do like the fact you're not trying to shoot all the way down to the 140. Let me go back. You say July 22nd. I'm going to pull up my calendar here, folks. I just got to find out. Yeah, week and a half. Yep. So you're going week 4. Yeah, we do have an expiration cycle today, by the way, folks, or this week. Just to remind you, the 15th. But he's doing a week and a half on both of those, both EPD and waste management. Thanks, Brian. I'll make note, write that down. Let's go. James has got AR. And this is August 5th, 12th calendar. Cool. Okay. So we're going to do, let me get the weeks out here. August 5th. So 1, 2, 3, 4 weeks, and 12th, the week after that. So it's pretty tight. It's pretty tight on your calendar. You could go, no, I like it. 40s. Let's take a look at it. Might be too bullish, but I gave myself time. Okay, so he's going to shoot back up to these levels. You can see that it had a little bit of a resistance there and then blew through it towards the end of May going into June. So I do like it. You're expecting a reverse here. You know, it'd be kind of interesting. My 2 cents on this, James. I don't think you're too bullish at all if you wait for this to break 35 first. That thing breaks 35. Now all of a sudden we have the ability to retest this 40. The candle so far today looks really, really nice. But I don't mind it. I don't mind it. Kind of a reversal pattern, if you will. You know what I mean? This is technically below its moving averages, so on and so forth. So wait for the reversal to confirm. Let that neckline, that 35 break, if you really want to get a little bit more probability out of it. Right? Now, obviously, you're going to have to pay a little bit more. It's going to cost you a little bit more, but might be worth it in the long run. Thanks. I wrote that down. Okay. Yep, and he says it's got good risk reward. I imagine it does. I bet it really does. Okay, let's go to Matt's got a trade here. JKS. Waiting for confirmation. August bull call spread 65.80. Let's take a look at that. Oh, let Let me zoom in on it first. Okay. Confirmation to yes. So he's waiting for the pivot to confirm. Right? How does the pivot confirm? Well, you got it down, reversal, and then once this neckline here is broken, let's just make up our little candle here. There. That's a good confirmed pivot. Well, let's give a little bit of that just for fun. Okay. So yeah, breakout there, shooting for 80. Makes sense. That's fine. 65. So he's going to be nice and deep in the money there. 65.80. Bull call spread once the pivot confirms. I can get behind that. Sure. Very nice, Matt. Okay. And we have another one. Chinese company doing well while the yep, okay. Let's take a look. MCHI. I'm thinking that's a ticker symbol. Let me know if that is. Yep, there you go. Talking about some of the Chinese stocks that we've been showing in the last few classes. They've been outperforming and doing pretty well. They hiccuped a little bit as of late, but outperformance. So Matt's bringing up that, hey, take a look at MCIH because it looks like it's starting to fall out of bed here. And it did get hit. Oh, let me zoom in. Sorry, guys. Sometimes I talk before I get there. But you could see this was actually a really nice trade going on. And this is just this week. Monday, Tuesday, and then today so far. So, yes. I mean, think about what a week does. Coming on Friday, I would have been looking to, purchasing it as it broke above the 56.5 level. The funny thing is, it just kind of gave up. Now, in all honesty, I believe Monday there was another round or worries of COVID in China and some shutdowns or some sort of restrictions. I made comment of it because the markets reacted pretty aggressively to it. And I made a funny little joke about that we're still superly, heavily dependent on China. Apple actually got smeared that day. Well, maybe it didn't get smeared. We'll check it here. But it did go down as well. And so I giggled to myself that, the key to America's future is quality Chinese products, right? That's the joke. All right. Cool. Thanks, Matt. Something to look at. All right. Moving along. That was a joke, by the way. I hope people know that. Let's take a look at Merck. This has been on our bull watch list for some time. It has. I like this in Eli Lilly. In fact, last week, I remember it sounded like a broken record here. But let's take a look at what Justin's talking about. 92.96 diagonal spread, 22nd of July, so week 4, August 19th, which is week 3. Let's draw some of these lines here. 92.96. There's our 92, and there's our 96. Oh, it's a no-brainer. That's great. Very nice. Really nice. Cool. Great trade. Not much more I can say about it. I like it. I like dates. I like the ability to just sit and wait and relax. If you've got some sort of stopping point, you could see it break below that 91, maybe the 90 or those moving averages. Might be an exit. But you're selling a decent amount of time. That's still a week and a half. So I like it, Justin. Fun trade. Oh, cool. All right. Reading. Looks like that's about all we got for today. That's fine. We'll keep it short and sweet. We'll see how these markets finish. Take a look at that. They recovered the majority of those losses. Now, this is a market that was technically moving to the downside. That data came out. Sometimes you can spin it. Rob brings this up a lot, and we do here at Maverick quite often, that as soon as the markets start avoiding bad news, could be the sign of a bottom or the fact that the investors already given up enough. They're sick of it. They'll worry about it down the road, but putting money back to work makes sense to them. So, is this bad news? It was a little bit worse than expected. We did expect a little bit of a bump to the upside when we got it, but nothing's changed. The Fed knows inflation's there. Every time you and I go to the gas pump or the grocery store, we know inflation's there. If these numbers are delayed, right? So they're not pricing in what's gone on over the last 30 days. And I think that's what the White House was saying in a couple of comments. So we'll see if this just kind of erases itself. If it does, we might be leaning a little bit more towards the bull side come Sunday, which is fine. But some of the trades we looked at here, guys, that we're looking at, I do like all of them. So don't be afraid to go up, down, and sideways. All right, guys, thank you so much. Let me go ahead and start typing these in so I can share them with you, and then I'll cut you loose. So, 3 bulls, 2 bears. I like it. And please take a look at the ones that I brought to you well, I shouldn't say I brought to you. You guys brought them to me. The ones that I like that triggered from last week and so far this week. And then, all right, pretty light, but that's fine. Okay. There they are. Now, I was going to put sideways on EPD. However, it seems like it's on the top of a range. So I do like it directionally back down to that range. But if you guys want to play a longer, slower play between that range, a nice sideways trade on that could work as well. Interesting how we found so many sideways trades. I've seen so many of them as of late. Cool, guys. Well, thank you so much. Appreciate all of your participation. And if you got any questions, you know how to get a hold of us. We'll see you next time. Bye, guys.